Hi, John Morrison Yoda here. Today I want to talk about the importance of organizing your chart of accounts in the best way possible, particularly when it comes to analyzing your income statement.
Do you understand what a chart of accounts is?
It's something that John certainly didn't learn from us.
Mom, Dad, I'm in a video. For those who don't understand what a chart of account is, it simply categorizes every line item in your income statement and balance sheet. For example, if money is spent on Google AdWords to generate traffic to your website, there are multiple ways this could be reflected on the income statement. Depending on how it is named in the chart of accounts, you could create a category called Google AdWords, and anytime money is spent on Google AdWords, this will show up with its own title in that chart of accounts. There's also room for creativity. A digital media category can be created and multiple transactions can be grouped in the same account. For instance, if money is spent on both Google and Facebook, these can be grouped under the digital media umbrella. Another thing that can be done when creating the chart of accounts is that a cluster of accounts can be grouped into one major category. For example, you can create a category for marketing and then have everything related specifically to marketing under the marketing category. This is crucial when you're asking yourself important questions such as, what % of revenue do we assign to marketing related activities? On the other hand, you may have expenses that you will want to group into multiple accounts. Payroll is often placed into one chart of accounts called payroll fees. Ideally, you can regroup each employee into their department so you can get a true idea of what is being spent in each department. For example, if you have 2 employees and one works in operations and the other works in marketing, you will want to move the payroll of each individual to their respective department. This way you know the true cost for each department. There are generally 7 major categories that I suggest a company should create: sales, marketing, operations, finance, innovation, executive, and client service. By grouping all of your expenses accordingly, you can easily determine the amount of expenses spent in each field, detecting overinvestment or underinvestment in a specific area. Once you have your chart of accounts properly organized, the next step is to ensure that your budget aligns with the same categories of expenditures. A chart of accounts will become a necessary part of scaling your business, so let's get growing.
This could be one of John's greatest inventions.
I don't think he invented it, but let's let him think he did.